Gold prices are off nearly 3% from last week's highs. Recall, June gold got as high as roughly $13.30, now trading closer to $12.90 on a several down days in a row, but it's been pretty much a straight shoot since last Monday. We've seen the market come off. It looked like things really peaked early in the week in the gold markets, and after that crazy sort of risk-off trade we saw, where riskless assets really prevailed, not only in gold, but we saw it in the bond market, and it just seemed that things really overextended themselves. The sell-off we saw, like I said, 3% over the last week, has been steady and doesn't seem to have an end to it, at least not yet. Right now we're seeing continuing selling pressures, whether it come from stronger dollar, whether it come from better appetite for risk on the other side. Likewise, I think that the market hiccup may have just been that, a knee-jerk reaction, and things are normalizing at this point. If you look at the dollar trade, it had already started its rally before the sell-off in gold. So while the two tend to act opposite of each other, it wasn't necessarily started by the dollar, but certainly the dollar is influencing the gold trade now. As we are pushing towards new lows in gold, we are edging ever so closer to those year-to-date highs in the dollar index. So right now the dollar index remains strong, despite what we're hearing from the Fed, despite what the market anticipation is of Fed policy. It just seems to me that everything just sort of got out over its skis last week and now is starting to again normalize, a word I think we're going to hear a lot of in the days and weeks ahead. So lastly, let's talk about positioning, because the gold speculators, long specs, have been sort of pushing this market higher. They may have peaked, though, last week, as they were certainly much longer than they have been really at any time since the highs were put in early February. And I think that they were the cause of this sell-off. They may have been started it got momentum rolling, and then I think you may have had others jump on, but the speculators certainly were likely the culprit for the beginning and midpoints of the sell-off. Where we go from here, though, would be very interesting, because I think if we start to create sort of a support level down around the 1290 mark, we could start to see it build back up. It would be speculators, I think, that gets the market moving again, but they are not jumping back in with both feet. I think they're waiting for calmer heads. As you look over at the bond market, you see yields rising. Equities are really the only ones that didn't really see much play. We did see some higher volatility marks in the equity markets, but certainly last week's we didn't see the sell-off that we would have expected with a bond rally like we got. And gold markets really separated themselves from everything after that Monday peak was put in, because as the bond yields continued to tumble, we did not see the same rise and rally in gold. So right now, gold's sort of on an island on its own, but maybe starting to re-correlate with the dollar. As the dollar gets stronger, we are seeing gold prices get weaker, as we look at speculators probably getting back to near flat positioning-wise, and that could create some opportunity to both sides of the market, depending on where we see some of this data come in, how the Brexit thing falls into place, and always that China trade situation comes to the forefront. So as we head into the beginning of this week, gold prices remain very weak, but nearing some key support.